Bitcoin has just soared to $30,000, and that means that buy the dip is officially back in action. What does that really mean? Because let's go through this. 4 days ago, I did a video called New Bull Market for Bitcoin and Crypto Confirmed, and in this video, I talked about how it was buy the dip season again. Now, bull markets will have massive rips upward, but they will also have huge corrections downward. Now, once you have a reasonable belief that you're in a new bull market or you're in a bullish market of some sort, you want to look for dips. And that is exactly what I have been doing since we got this news here. And this was 3 months ago. This was on March 12th. This is when we got the news that the bailouts were actually coming to save Silicon Valley Bank. And we're going to talk about today why this is such a big story, why this, in my opinion, was the change of macro climate that would allow for a new bullish market, or at least some end in sight to the seemingly endless inflationary macro storm. And with this rip in Bitcoin up to $30,000, we see Jerome Powell declaring that, hey, maybe this crypto stuff has some staying power. Oh, we know that, Jay. We know. So what is fueling this absolutely astronomical pump of Bitcoin up above 30,000, bringing pretty much all of the market with it? Check it out. This is something I want you guys to be tracking. During these days where Bitcoin catches a major bid, what are the coins that are even outperforming Bitcoin? Because in these times, you get a lot of people saying, hey, look, you want to be all in on Bitcoin. That's the place to be. But in reality, there are always going to be coins that outperform Bitcoin, even on its best days. And we know how the market cycle works here is as soon as Bitcoin reaches a certain place where the bulls run out of steam, then the money rotates into alts and alts go absolutely bananas. Now, I want to be very clear here. I don't expect a full altcoin season where things get absolutely insane until Bitcoin hits a new all-time high. Until then, it's still accumulation mode. But it's important to realize the macro factors that were conspiring against crypto, against risk assets, against Bitcoin have largely flipped. And while nothing is 100% probability, we now see a high probability of Bitcoin catching a bid from various macro outcomes over the coming weeks, months, and really in general, Bitcoin and the rest of crypto are looking way more durable than they did just a few months ago. Now, this all started with the BlackRock ETF filing. That's when we really knew that the fix was in and the big boys were coming in to take over crypto, and that crypto certainly wasn't going away. Since then, we've seen Invesco, WisdomTree, Fidelity, Citadel, and Charles Schwab, all of these massive asset managers and financial institutions that are heavily in bed with regulators and longtime staples of the traditional finance world are pushing hard on getting a Bitcoin ETF approved. It's Bitcoin ETF season. In fact, I wouldn't be surprised if we see the approval of a Bitcoin ETF before the next halving of Bitcoin. And that could dramatically alter the supply and demand dynamics of Bitcoin itself. And that's why as soon as we saw a flip in the macro environment, some bailouts, some new liquidity coming into the market from the Fed, I believed it was the time to start accumulating these down bad and de-risked assets. First of all, if you're not following me on Twitter, you need to follow me on Twitter right now at EllioTrades. I'm tweeting and retweeting some absolute bangers. It's way easier to get information out there to Twitter, so make sure you're following me over there. But this tweet really hits it home for me. It never ceases to stun how overwhelmingly people want to add risk when things are riskiest and reduce risk when things have already been massively de-risked. You see it across the capital stack of degens, retail institutions, folly. And what Chris is saying here is that right now, even now, after this pump to 30K, most Bitcoin and cryptocurrencies are at huge discounts to where they were trading in the peak of the bull market. And that means that they have been de-risked to a degree. While some things might not hit their all-time high, if you're buying at 95% down, you really don't need it to hit the all-time high to make insane gains. Obviously, we all hope that not only they hit their all-time highs, but go well beyond that. And I believe that the coins in the right narrative that have active communities and are able to market effectively will have astronomical price increases with the new cycle. That's almost a guarantee in my mind. And that's why I've been accumulating in the niches that I believe in. However, it's important to realize that when things feel terrible, that's usually the time that they are the least risky, as opposed to when they feel amazing. That's when they are the most risky, because that's when everyone's jumping in and prices are likely very elevated. Now, how can we be sure that the markets are actually getting supported here by monetary policy? We've seen the upticks in liquidity, but check this out. Today, we got word that Powell doesn't see how much the reverse repo will shrink. Now, what does this mean effectively? In simple terms, when the Fed buys securities from a seller who agrees to repurchase them, it's injecting reserves into the financial system. This means that if the reverse repo facility doesn't shrink, that effectively more or similar amounts of liquidity are staying in the market. I'm going to break this down real simple. It's good for Bitcoin. It's good for crypto. It's good for equities. In general, it's good for assets. So let's get to the point. How do we make a million, bazillion, quadrillion, quadrillion dollars off of crypto in this new run? Because I know a lot of people are here for the decentralization, for the philosophy, for the community. Almost everyone here would like the number to go up on their portfolio. So would I. When you're on the get-go here, it's good to take a little survey here. First of all, you can see Bitcoin already cooling off from this 30,000. I think the move has more or less played out. You definitely want to look for the next dip in the market to accumulate. But again, with all of this positive news, I wouldn't be looking for the lower 20Ks. I wouldn't be looking for aggressive downside, but just know that you don't want to be buying into a 10 or 12% pump on Bitcoin. That usually is about as far as Bitcoin gets stretched on any single day. Now we are in history making mode. If people really believe that an ETF is coming that will completely throw out the rules of what kind of a pump is possible short term, which is why to me, it's way riskier not to have exposure to this industry right now. It's absolutely insane not to have exposure to this industry. Now, should you be 100% in your favorite altcoin or 100% in anything? No. Like I said, I've been deploying methodically, but I have a pretty significant chunk deployed already, and I have plenty of reserves to buy on the dip days, and I'm very happy with my performance so far in 2023. Now, looking at these charts, you're going to want to look and identify these big gainers here. And as you can see, Pepe is at top of the list. Maybe, who knows, maybe this is the beginning of Pepe having its next sort of like Doge moment here. I don't know. I definitely don't ever buy into anything that's over a 30% pump, but you could see like this thing is down, 70%. It was down almost 80% here from its astronomical high. We know meme coins have some place in this ecosystem, though I never promote actually buying them because more people always get burned than make money off of them. But anyway, you see Pepe moving. You also see Conflux. This is a strong Asian narrative coin. It's kind of the biggest Asian narrative coin. And this one is having a major day as well. This one actually has a ton of fundamentals backing it. I would consider it a fundamentals driven coin as well as a narrative driven coin. I do not hold any Conflux, but I plan to build a position steadily over the coming months. What I want you to do is just start going down this and looking at the coins catching major bids on the days that Bitcoin erupts, especially the ones outperforming Bitcoin are ones where you want to say, what is this telling me about the way the market is valuing these coins and these assets? Is there something worth digging in here, or is it a one-off fluke here? Obviously, Bitcoin Cash is catching the narrative that has once again been included in the sacred 4 coins that will be traded on these super highly regulated platforms that the big banks are creating. I guess it's because of the low SEC risk, given that it's a Bitcoin fork. Again, I'm not going to go too deep into this because this is deep stuff, but I'm actually very interested in liquid staking derivatives and LSDFi. Again, I'm not going to go too deep into this, but I'm always very interested in liquid staking derivatives. I'm not going to name coins or anything. I just want y'all to start learning to research some of these sub-narratives. Remember, the bull markets are for buying the dip. The bear markets are for selling the rally. I believe the regime change has changed from selling the rally to buying the dip. I made that very clear that I thought we were in a full buy the dip mode as soon as we started seeing the bank bailouts 3 months ago. It was around 19K Bitcoin. And since then, I have deployed more money on dip days. I will continue to do that. You don't want to chase the green candles ever in crypto. You want to buy red candles when you're in a macro uptrend, and it certainly feels quite strong right now. Could we see some massive corrections? Of course we could. Could we see new macro variables? Of course we could. But for now, I'm liking the risk reward of adding on dip days and generally sinking more and more capital into this market, as it seems like the AI narrative has sent the NASDAQ back up into healthy zones, has really flipped the potential for a deep bear market in the equities markets. I do think that we will get this macro storm, but it could be delayed. It could be that we don't actually see the deflation of this macro bubble until we see another full cycle play out. And quite frankly, that's my base case right now. As always, I'll be accumulating slowly and steadily, not getting emotional, even though it's hard not to be super excited on days like today. If you guys have enjoyed the coverage, you know what to do. Smash that like button. Make sure to leave a comment. And as always, I'll be getting back to covering more of the narratives that I feel are super important to this industry, covering my own projects, as it is my mission to make sure that they lead this industry. And I can't wait to start talking my shit all over again, because I am so excited for the future of this industry, for what my teams have been building, for what lies ahead for those who have been faithful and stuck with it. I can't wait to deliver magic for you guys on the content side, on the product side, on the ecosystem side. It's going to be a whole hell of a lot of fun. As always, I'm EllioTrades, and I can't wait for this next part of the market.